Understanding Stock Market Trends, a Beginner's Guide. Hello, everyone. Welcome back to our channel. Today, we're diving into an exciting topic that you might have heard about in the news, in conversations, or when browsing the internet. Stock market trends. This video is designed to break down this concept into simple, easy-to-understand parts, especially for those of you learning English and interested in expanding your financial vocabulary. So, let's get started and demystify what stock market trends are all about. The stock market is a place where shares of publicly held companies are bought and sold. Think of it as a giant marketplace, not for goods and vegetables, but for pieces of companies. When you buy a share, you own a small part of that company. The prices of these shares go up and down based on how well the company is doing and how investors feel about the company's future. In the stock market, a trend refers to the general direction in which the prices of stocks are moving. There are mainly three types of trends. 1. Uptrend. This is when the prices of stocks are generally moving upwards. It's a sign that the market is doing well, and investors are optimistic. 2. Downtrend. This is the opposite of an uptrend. Prices are generally falling, indicating that the market is in a bit of trouble or investors are feeling pessimistic. 3. Sideways trend. Sometimes, the market doesn't move much in either direction but moves within a specific range. This is known as a sideways trend, indicating a period of uncertainty or consolidation. Understanding trends in the stock market is crucial for investors. Here's why. Investment decisions. Knowing the trend helps investors decide when to buy or sell shares. Buying in an uptrend and selling before a downtrend can maximize profits. Economic indicators. Stock market trends can indicate the health of the economy. An uptrend might suggest economic growth, while a downtrend could signal a recession. Sector performance. Trends can also show which sectors of the economy are performing well. For example, technology stocks might be in an uptrend, indicating high demand for tech products and services. Spotting trends in the stock market involves looking at charts and data. Investors use tools like moving averages, which smooth out daily price fluctuations to highlight longer-term trends. Additionally, keeping an eye on news and economic indicators can help predict how trends might move. Thank you for watching our video on stock market trends. We hope this explainer has made the concept clearer and more accessible, especially for those of you enhancing your English and financial knowledge. Remember, understanding the stock market is a valuable skill, not just for investors, but for anyone interested in how the world of finance impacts our daily lives. Keep learning, and see you in our next video.